All right, we are live for the Friday edition of the Mike and Mario show, and it's been several weeks, but nonetheless, we're here in real time, and I'm excited to be back. And I definitely needed some time off myself personally, but Mario, here we are, man. How are you doing, my friend?
I'm doing well, Mike, and you?
Oh man, I'm doing good, man. And so before we went live, I was talking about how well, I didn't mention this, but like literally, I've been live streaming faithfully for 6 years straight, 3 to 4, 5 times a week. And I've never took a prolonged period off other than a week or two here. And it's been refreshing to just unplug a little bit. You know, I can see better. I can sense things better. My senses are a little in heightened just because I dialed back on some of the negative news. But life is still moving on, man. And here we are now. And looking forward to connecting with you. Of course, I've been watching your videos, so that's how I stay. That's how I stay informed. But
I haven't unplugged, but what I've done is I've been playing a lot more golf and
mhm,
getting a bit of coaching because my swing had deteriorated. So that's kind of refreshed me as well,
yeah,
away from a lot of the doom and gloom.
yeah.
Yeah, I can understand why you'd want to do what you did.
Yeah, yeah, and it's good because now we're. I think this is maybe our what going on our third year of connecting for these live streams on Fridays, if I'm not mistaken. So,
Yeah.
definitely offers a lot of value to the viewers, man. So for those who are plugged in, definitely looking forward to connecting back with you guys. Feel free to throw out some thoughts, questions, ideas. We'll try to jump on those towards the end. And if you're here, hit that thumbs up, show some love for the channels. And so another thing I want to mention. Then we got 6, 7 articles to get into. So this is more of a reintroduction of the Mike Murray show, but I want to encourage people to make sure you support those people that you follow and that you learn from and that you enjoy being along on the journey with them. Just because I think coming up this fall, the next spring, especially the media crackdown, like there's a lot of talk about here in the US, how YouTube is going to start hiding news, alternative news, so that they can maintain their narrative. So definitely make sure you stay plugged in and go from there. But all right, enough ranting, man. Let's get back into it. So the UK, from what I've gathered, based upon what I watched from your videos, seems to be leading the Western world downward. And if I can say that correctly, even though it's not something to laugh about, but I think it's a lot of stuff we can learn from what's happening. And moving the goalposts is always something we talked about when it comes to the whole CPI 2% target that they established for themselves to keep compounded inflation going. And so now they're talking about adjusting that. So the very first article, let's jump into it, man, because actually it's the wrong article, but give me a second here. I got to get my stuff together. But I think this is
Yeah.
very important because will UK lead the way, but the advisor to the UK Chancellor urges to rethink on Bank of England's 2% CPI target. So there's a lot of rethinking these days, but does this surprise you at all, to say the least?
No, and notice how this advisor works for JPMorgan Asset
Mhm.
Management. And
Yeah,
if you read the whole thing, and you don't have to show it, I've read it.
yeah,
She says that, oh, we've been bouncing along the
zero
zero
bound.
level, zero bound. And the thing is, I've done videos this year and last year because the Office of National Statistics
Mhm.
was told by the government to basically change the history of CPI in the UK. So
Yeah,
from May last year, the CPI, for example, from 1997 to 2020, in 1997 was when the Bank of England was given independence and
hmm,
told to follow a 2% target, right?
yeah,
But in those 23 years, the average CPI was 2.7, which was way above 2%. So they
right,
failed to reach that target. And zero point 0.7 doesn't seem a lot, but over 23 years, it adds up and compounds. But
right,
now with the change they did last May, magically that number has gone from 2.7 to 1.9.
hmm,
So now they can justify this kind of talk. They say, oh, the Bank of England has kept the CPI prior to you know what, and the beer
right,
disease. They
right.
kept it below 2, so they've done a good job. So we can actually keep it at 3 or 4, and all that's going to do, of course, is screw the average person out there,
Mhm.
because we know that only the top 1 or 0.01% really can protect themselves against a devaluing or uh, currency debasement.
Yeah.
So I'm not surprised by this, and they're going to do everything they can to just keep fooling and cheating the public because that's
Yeah.
what it is.
Yeah, one of the things as I was reading through the article, it talks about the Bank of England policymakers have strongly resisted suggestions that the inflation target should be changed amid concerns that altering it at a time of soaring prices would deal a further blow to its credibility. And so,
What
if that doesn't exactly like what credibility at this current moment, but also even the numbers that they use, we all know that the stats we get from them are all tainted and altered. So once again, they're having issues with their own numbers at this current moment because things are so problematic in the overall economy. So it doesn't surprise me one bit. But the question will be, will other central banks beyond the Bank of England begin at some point in the near
Yeah,
future, as a result of trying to cover up the catastrophe that's happening, decide to talk about adjusting their numbers as well? Because
I think
stagflation is a major topic in the UK right now. And of course, we're nowhere near that, CPI figure wise. But once again, do you think the Fed or other central banks, EU, for example, might end up wanting to talk about adjusting the numbers as well?
yeah, there has been talk in the U.S. about that as well early this year
Yeah,
about
they,
just
they, they shot that down though.
yeah,
Jerome Powell shot that down at
yeah,
first.
yeah, but they the excuse of the proponents of this is that if you try to get to 2%, it could create quite a lot of accidents and problems.
Yeah,
So why not keep it up to 3 or 4? So I think what they might do is just change the methodology, just like they did in the 80s and 90s. We've seen from through the work of John Williams at Shadow Stats. That's
mm,
ho- that's how they solved the problem of high CPI, is just to just tinker with the numbers and create like substitution, hedonics, and I'm sure they've probably done quite a bit to in the U.S. as well in terms of the statistics, not just in the UK.
yeah. So watch this. So as you're talking, we're talking about the CPI figures being altered. I just typed in, Jerome Powell CPI figures adjustment, and let me see here. The very first thing that popped up. Let me share this with you. Let me see. So if you can see this, I'll show this right here. So this article. Let me see if I can zoom in. Just read this initial. You see this right here. A 3% Fed inflation target. Powell should stick to his promises. So this is as of today. So literally, I clicked on this, and then the first thing was the Fed thinks his job will be done at 2% inflation. So once again, they are bringing back the narrative of needing to address that particular number. So definitely no coincidence, but
Mm.
yeah, 3%. Anyway, so we'll keep it moving. But um, the UK, man, the UK is in a unique position, I think, because they appear to be leading the world in a different direction. And it's going to be problem. It's going to be a problem to keep the narrative going if they are able to. So the next article that you shared with me was about stagflation in the UK, and so I assume that the pinch is being felt by the consumer, the savers, and then the housing issue as well is going to be an issue. So I guess overall, right at this current moment, I'm assuming confidence is not there when it comes to people trusting the government, nevertheless the central bank as well, huh?
Yeah, and I think one of the reasons why we're not doing as well is because we signed up to in '08 actually to the Climate Change Act,
Hmm.
uh, and it was passed I think the same week that Lehman Brothers collapsed. And I interviewed a former MP, I think
Hmm.
uh, last year. He's now a lord, but he's still okay. He's all right, Lord
Yeah.
Lilly, and he was one of the only 5 MPs to vote against it.
Oops.
Rudy's doing something funny.
Must have said something you don't like.
No, yeah, but there's 600 odd MPs, and only 5 voted against the Climate Change Act, which said that they had to go to carbon neutrality.
Hmm.
So our economy, it doesn't matter what party's in charge,
Right.
uh, we're going to suffer a lot because we don't have the cheapest energy, and they're trying to push us into this green agenda. You
Hmm.
know, this week, the mayor of London extended this ultra low emission zone from the middle of London to outside of London. So people, unless they have the right car, they have to
Hmm.
pay £12.50 a day just to drive out of their houses, and it's going to hurt people. So they're deliberately trying to. Well, they don't think they're destroying the economy. They think they're saving the environment and saving, cleaning the air. But I think it's very misguided. What they're going to do is keep destroying the economy, and that's why we have stagflation.
Yeah. Yeah, stagflation is not just limited to the UK, it's happening globally. So I'm like, let me just look up and find out what the official definition of stagflation is, because everybody nowadays they be changing, redefining words and everything in between. But it says stagflation is an economic cycle characterized by slow growth and a high unemployment rate accompanied by inflation. So
Yeah,
no growth and expansion of the monetary base, ultimately speaking.
yeah,
And so it's just not limited to the UK just because it's happening here. So here's another little headline here that came out today. It says increasing sense of doom. Manufacturing surveys scream stagflation in July, and of course the numbers are always adjusted. So
yeah.
stagflation here in America as well, because we are in a recession. It's
Here
just
in
not
the
official.
UK, the official unemployment rate here is quite low,
Hmm.
but they don't tell you that they've added hundreds of thousands of people to like the disabled list, where they
Hmm.
get benefits. They're not counted as unemployed, and so uh, our unemployment rate is like something like 3.5, which doesn't really represent anything. And I
Yeah.
think same thing in the U.S. The unemployment rate has ticked up today. It went up from 3.3 to 3.8, but I
Hmm.
would say that that one also doesn't really give you the good doesn't give you the full picture, because a lot of people that have given up working, they're not working
Right.
anymore.
Right.
And yeah, so, and the growth part as well in the UK. I think our GDP, they just revised GDP from 2021. The same
Yeah.
people that have changed the history of CPI here. So can
Hmm.
you really trust the numbers? It reminds me of the Soviet Union, when they used to publish great numbers in the Soviet Union, and all
Hmm.
of a sudden the Soviet Union collapsed. It feels like that, and we've seen in the last or two in the U.S. that a lot of the non-farm payroll numbers. I think that every month this year had been, the numbers beat expectations or something,
Hmm.
but now they're all being revised down. And today's
Right.
number was a little higher than expected. It was expected 170,000, came out like 187,
Yeah.
but then they revised the previous week's number
Hmm.
from like 187 to 157. And no one's going to look at that. The,
Right.
the,
Right. You don't. It's in the past.
the headlines for the public is just going to be, uh, jobs increased by more than expected. And they're not going to say that the previous month was revised
Hmm.
massively lower. It's all,
And that's to me that's clear evidence of how literally they can give us any number today because it's all about maintaining the current facade that everything is fine, so that every Friday they close out, markets are in a green, people feel good, people can go into the weekend, especially here with Labor Day weekend, people can take the weekend off and go have fun, not thinking about their portfolios or nothing like that, because everything is fine. But then it's like a cyclical thing. Every month there's something new. There's something new. They give us these bogus numbers, and they can give it to us until they can't anymore, until
yeah.
something breaks.
Well, I mean, the stock market is not really doing much. The Dow's up 30 points, the Nasdaq is down 50, and the S&P is unchanged. But
Yeah.
I've noticed, these didn't look like very good numbers for the economy. But one thing that is not good today, and of course, the average Joe or Jane on the street is not going to be looking at that. But the 10-year yield is up 10 basis points, which is
Mhm.
quite big on a weak number. We're back to 420. So there's something wrong there. I'm not sure what it is.
Yeah.
And yeah, what else? Yeah, what you're saying there about them giving you giving the number that they want
Right.
to manage the market. I think Jim Sinclair called it MOPE, MOPE,
Mhm.
management of perception economics, and that's
Mm.
been happening for decades. Even
Yeah.
during, I think that's something the Clinton administration learned. I think there was a Clinton official who said, if I were able to come back, in another at another life, I'd want
Yeah.
to come back as the bond market because bond markets are so powerful. So they knew back then that they had to like manage perceptions in the financial markets.
Yeah. It is what it is. And also, I noticed in the comments, so it looks like Mario, because you were set to stream as well. So for whatever reason, people saying it's not streaming on your side. So what we have to do is probably download this and upload it to your side because for whatever reason, it's not showing on your side. So perhaps deleting that first top post is what probably was a cause for this,
Oh,
I
I
assume.
see.
But I don't
Well,
know. But we'll keep
I
going.
would just like post it tomorrow on my
Yeah.
channel.
Yeah.
I'm sorry, guys. It's just that the last few times we did the Mike and Mary show, I learned how to go live simultaneously with
Yeah.
Mike, and now I've forgotten
Yeah.
because we haven't been on for a while.
It's
So
all good, but we're back in action. So let's keep it going. Let's get to some articles, more headlines, and then we'll get to some thoughts, questions. So hopefully you guys have a gang of topics and questions you guys want to touch on. But Labor Day weekend, here we are. Gas prices. Labor Day weekend gas prices highest in over a decade. And so since this current administration has been in place, everybody's concerned about the price of everything. And of course, gas hits hard, unfortunately. But it says, as we hate to say it, but gas prices are up over 80% since Biden's election. So not surprising whatsoever, but I'm assuming people are taking that into account as they're doing their holiday travel this weekend. So we'll see. What are the gas prices like in the UK? You guys, I mean, are they?
yeah, they've been ticking up, and today I drove by a gas station or a petrol station, and they
Mhm.
ticked down a little bit. But I suspect they're going to be going up next week because as I look here at crude oil,
Mhm.
WTI, it's up another 2% right now. It's at 85. And if I look at the British pound versus the dollar, it's down uh, almost 3/4%, which is quite big. So I expect petrol or gas prices to keep going up here too, and it's not
Yeah.
going to help.
And one thing I did notice in this article, let me bring this back up, is one of the concerns I had initially was that the current administration would not be refilling the strategic petroleum reserves. But according to this, it says President Biden is running out of options to stem the tide. Here are, as his administration has started to refill the SPR in recent weeks. So this little chart here shows that uh, they drained it completely for the most part, but it's ticking up slightly with a couple million barrels or whatever. But this little green circle here shows that they are putting forth effort to refill the SPR. So not sure what good it'll do before the next, market issues, but more power to it. So, but it is what it is. All right, let's keep it going. A couple more headlines, then we get to some questions. And so I remember last time we did connect, all eyes at the time were on the BRICS. And so the BRICS meeting has come and gone. They've added a couple new nations starting January 1st. And I mentioned, like, the nations some of the nations that they strategically added, I think three of the Middle Eastern countries are heavy oil nations. And so I looked at it as like, okay, are they trying to corner the oil market as a phase one, perhaps? And then perhaps later on down the line, price that oil that they have in their little conglomerate in some form of a alternative currency. So we'll have to wait and see. But what are your thoughts on that? What's the chance that they literally try to everything coming from that region is priced in something other than USD for
Yeah,
international trade?
yeah, I think eventually they will try to maybe have their own currency, but I think the important thing right now is that they're growing. BRICS is going to
Mm-hmm.
become 11,
Mm-hmm.
and they're going to, yeah, they're a big chunk of the world population. They have a lot of commodities. They do a lot of trade with China, and that's increasing. And
Yeah.
I saw that China is going to invest for the first time abroad in yuan.
Iran. Yeah.
No, Argentina.
In Argentina. Okay. Yeah. Yeah. I saw that. Yeah.
So uh, I think there's a lot of disdain, and people play down the BRICS. They say that
Mhm.
they're useless, that they're never going to do anything together. But I think they do have a common, how can I say, goal. And the common
Mhm.
goal is to be less dependent on the West, because
Right.
the West
Right.
has kind of screwed the rest of the world for a few hundred years. And
Right.
of course, it's never easy to start a big group like this. I think even when they started the Bretton Woods system, there were
Mhm.
difference of opinions. I mean, if you remember in the 50s, there was the Suez Crisis when
Mhm.
France and the UK uh, invaded Egypt to stop
Mhm.
the Egyptians nationalizing the Suez Canal, and
Yeah.
the Americans actually went against the British and said, if you don't stop this, we're gonna pull the plug on the pound. So,
Yeah.
you know, um, yeah, there will be problems, but I think the takeaway from the BRICS is that they're going to expand. They're
Mhm.
going to be 11 by the 1st of January 2024. They could be, 20 or
20 or 30.
25, 20 or 25 by 2025. Who knows?
Yeah.
And
Yeah.
they're definitely going to try to trade with their own currencies. They're
Mhm.
going to, and that all that means is that they're going to need less and less dollars or pounds or euros or other Western currencies.
Right, right. And also, I think the whole BRICS formation is going to be chaotic at first, but then again, they have a common interest, as you mentioned, and it's basically de-dollarize their entire economies and come up with alternatives. But I think with in comparison to Bretton Woods, Bretton Woods was favorable at the time due to the a decade or two of wars prior to, so it made it easier for a lot of nations to run to the table for that type of agreement just for the rebuilding process. So I think if there happens to be another event, God forbid, similar to what happened with the World War series, then it'll be easier for the BRICS to come together on something common as well, just because the rebuilding process will need to be paid for in something other than USD. So I think it'll be easier for those guys to do that. And then speaking of which, I want to show that little visual from Dan Popescu about the BRICS, and this is of course from what we know, and of course I'm assuming it's a lot more than that. But here's the
Oh
new
yeah,
BRICS alignment and their current gold reserves as of July, according to what Dan put out there. So, but it was a turning point, as it says here, the Great Financial Crisis, to where something broke in the monetary system completely, and everybody started running the gold officially. So you couldn't hide it anymore because this thing is literally spiking up like the U.S. debt, or not as high yet, but
yeah.
yeah,
And
this says a lot. Go ahead.
the thing is, it says 6,506 tons. I
Yeah.
mean, and there's speculation that Chinese have at least
20.
20,000 tons,
Hmm.
and the Russians as well have a lot more.
Yeah.
So, and on the other side, the United States hasn't done an audit, independent audit of Fort Knox
Hmm.
in I don't know how long.
Right.
So, do they really have 8,300 tons unencumbered? It's difficult to
No.
say.
No. And at this current moment, anybody who's watching this monetary restructuring unfold would be willing to say that the likelihood that there's 8,000 tons of gold in Fort Knox is not probable. It's just because the Western Hemisphere talks nothing about gold, and all the talk about gold is coming from the BRICS and
Yeah,
their side of the world. So they
yeah.
don't want nothing to do with gold because I don't think nothing there.
I saw a clip on TikTok or Instagram of this guy, on the floor of the New York Stock Exchange, and he said he was talking about bricks, and he said I spoke to the guys here on the floor, and they laughed at me when I said there was going to be a bricks reserve currency, and they said The United States has twice as much gold as all the BRICS combined. But I'm sorry, the guys on the New York Stock Exchange floor, they don't trade gold. They trade
Right.
stocks and bonds, and they have no clue or idea. But that's the kind of stuff you get, and
Yeah.
I think a lot of people are going to be shocked, and it's not even a matter of them having their own reserve currency. It's a matter of them not using the dollar. That's going to make the demand for dollars drop massively.
Right, right. I mean, that's the thing. The biggest thing with this whole de-dollarization process, you don't need to get rid of dollars just because the Western Empire is going to implode on itself. You just need alternatives. And so I think between currency swaps and, of course, the use of the yuan down to down for the global South, being an option itself is more than enough to let us know that things are shifting. And speaking of which, let's jump on what's unfolding in China, man, because based upon all the activity happening over there, a lack of activity, it looks like it's a 2008 in the making type of crises unfolding, but it's been relatively contained thus far. And so, do you think, based upon all the negative news we're getting out of China, that the Western Hemisphere, i.e., the U.S. and the Federal Reserve, because they definitely would feel the repercussions of whatever happens over there, do you think the Federal Reserve would probably come in and help the Chinese out as far as papering over some of their losses, or what? Because if they go down, the domino's gonna fall over here mighty fast. And do you think they want that right now?
No, I don't think. I don't think the U.S. can help China,
Hmm.
because if there's a problem in China, is more domestic.
Yeah.
So unless the U.S. starts printing a renminbi, which they can't, China has loads of dollars, 3 trillion
Hmm.
in
Hmm.
reserve.
Hmm.
So I think China will be okay. Um, I think what's happening in China, according to the Sirius report, is that they actually want to take the air out of bubbles,
Hmm.
and like Evergrande and other real estate bubbles, and
Yeah.
they've done it. You see, because they and and us in the West, we've been used to seeing bailouts of everything, right?
Hmm. Hmm.
Oh wait, everything collapsed, and they came and brought it back.
Hmm.
2020, even the in March this year, they did let some banks collapse, but they bailed out depositors that had more than
Yeah.
250,000. And it's ironic because we're told that in the West we have free markets, in China they're communists, but
Hmm.
I actually think they're more they lean more towards free markets. So I don't think I'm not saying the Chinese economy isn't doing well, but they're just slowing things down because they don't want it to get out of hand. And
Hmm.
I don't think the U.S. can help.
Yeah.
China can help the U.S. because China has dollar reserves, and China has a surplus still with the U.S., but
Yeah.
not the
Now,
other way around.
yeah. Now, the reason I mentioned that just because if something was to happen over there, and if it wasn't a strategically event occurring right now where they're letting some air out the bubble just to get things like under control for whatever's to come, okay,
Yeah,
cool. But if it wasn't that, and if it wasn't a contagion event that happened to spread, just like whenever something happened to EU, whatever, creating
yeah,
some type of special currency swap, type of prop,
yeah.
like emergency fault line to prop up, just so
Yeah,
things don't get as bad.
I don't know. It just seems that the political climate in the U.S. is to be very anti-China.
Hmm.
Uh, not just on the left, but the right. It's like
Yeah.
CCP this, CCP that.
Hmm.
Even though I saw the other day that Goldman
They don't.
Sachs is working very closely with the Chinese government, they opened a private equity fund that was funded by the Chinese government partly.
Yeah.
So who knows?
Now watch this. They don't use the words or the letters CCP no more because that the communist side. So they use People's Republic because they want to make it appear as if like the Chinese people have the same liberties and freedoms we have, even though they're in a surveillance state. But so they change the narrative on how they address that particular country in of itself. So, but then again, like we'll have to wait and see. But
But
anyway, it
actually,
goes. It's not gonna be
it's
pretty. Mhm.
actually CP, com- CPC because it's actually the Communist Party of China. It's
Yeah.
not even Chinese Communist Party. So,
Hmm.
but
Okay. Okay.
I mean, the guy
Um.
was the poster child for being anti-Chinese and has been calling for a Chinese financial economic collapse for like the last 5 years is Kyle Bass, who I used
Yeah.
to listen to and
Mhm.
respect, but now he just seems to be a political mouthpiece.
Mhm. Hmm. Interesting. Yeah, I hear him every now and then, but whenever I hear him, he's basically bashing anything to do with China. While you
Hmm.
got the Ray Dalios and the Larry Finks, all those guys are rushing into China for
Yeah.
development after all
Well,
this stuff
did
blows
you
through.
know Blackstone, not BlackRock,
Hmm.
Blackstone,
Hmm.
who's run by Steven Schwartzman?
Hmm.
They have a program that they fund at Oxford University in the UK.
Hmm.
It's called the Rhodes Scholarship for Chinese students. You know,
Really?
there's a Rhodes Scholarship for American students.
Hmm.
You know, Bill Clinton was a Rhodes Scholar. He came to study at Oxford,
Hmm.
but they have a Rhodes Scholarship for communist Chinese students, and Blackstone finances it, and Oxford runs it. So, are they really our enemies? I mean, maybe it's just for public consumption,
Right.
but the
Right.
people high up, they're still working with them.
Right, right, right. And that's where I always go into that, the good guy, bad guy narrative that we've been given. The BRICS are bad, the West, Russia, and of course, Russia's been used as a scapegoat for now. And of course, Ukraine is still going on. And I think I hear more about it. Zelensky's using leverage now, trying to blackmail to Europe to give him more funds. And and we put 75 billion into it and about to send some more, but they sent $700 to the families of Maui. Yeah, yeah.
You got a
Um,
super chat there from
All right,
Chris.
let's get to some questions then. So we got Chris. Appreciate you, man. Says great to see you back on action again. When is S&P going down to grade? It's going to downgrade U.S. government debt like Fitch did recently. You think their metrics are not much different than the other two. Wow, butchered that
Well,
one. Good to see.
S&P downgraded the U.S. back in 2011, and their CEO was had to resign. So, but it's possible they could.
And I remember during that downgrade earlier in the decade, there was a lot of pushback, like from the Western government, like basically with some threats. And as you mentioned, somebody got fired. I haven't heard that now. Like as far as just the pushback from the government, it's like they're running with it or rolling with it, just because it doesn't matter at this point. Like you can downgrade us all you want because we're still going to print, and we still need deficits to fund everything. And what are you going to do about it? And then it's the people out here who's saying, the dollar's not going nowhere. The world needs our debt. What's his name? One of the guys on the All In podcast. Um, he's very like, no matter what, the U.S. has the reserve currency, we can run it into the ground because the world will always take our debt because the world is centered around debt. And I'm like,
I think that's wrong because they're moving away now. You know, the
mhm.
Brits are moving away from it. And I've got like, I'm not sure I can share this with you, but I got this from Commodity Discovery Fund. I think it's the Dutch guy who wrote The Great Reset. Willem Middelkamp.
Look at yeah.
Yeah, Middelkamp. And he's got a map of the world, of the planet
Mhm.
from 2000, and it has countries which share greater trade with, and it's got a blue box for the U.S. and a red one for China.
Yeah.
And in 2000, most of the world was blue.
Oh, so you got a link. You got a link. Put it in the thing or share screen. I'm curious to see it.
Yeah, it's a screenshot, so it's a
Okay.
picture on my thing. So
All right. Never mind.
unfortunately, but the thing is now in 2020, if you look at this map, the whole world, with the exception of Canada, Mexico, and a few countries in Europe, it's all orange. So if they're gonna be dealing with each other in their own currencies now with BRICS, why do they need U.S. debt? That's what I'm trying to say.
Yeah.
It's called. You might, if you might. Let's see if you Google it. It says who you're gonna call. Countries which share greater, which share greater trade. You, and if you do images, you might find it.
Okay. And let me see here. Countries that share greater trade.
Who you're gonna call. If you do images, you might find it.
Let me see what pops up here. United States. Okay, so let me see. Is this it here? Uh, is this it here?
Yeah. No, no, that's not it.
It's not it.
No.
Let me go back here. World GDP.
Let me go on. Let me go on Twitter. It might be on Twitter.
All right. Well, we look for that. We can. Let me see. But 30. We got a couple articles here. Nothing major. Nothing.
Yeah,
Nothing new. Too shocking.
but
Want to get us some questions?
yeah, let's do some questions then.
All right, let me see here. So for those who plugged in, feel free because it's been a while since we've connected with you guys. Curious to hear what you guys are keeping your eyes on, or what are some topics that's worth bringing to the forefront that we may not know about or may know about. And if you guys want to share some thoughts on it, feel free to do that. So put out some questions in the chat and let's see what we can get going here. And now we'll see where it takes us. So highlight at RTD or whatever so to stand out. And then we can answer if we see anything. Let me see here. Question from UK Financial Preparedness. Mario, are you aware that the UK National Grid will pay us to stop using electricity on at least 12 separate occasions in winter 23? It's all conditioned for the incoming energy.
Yeah, I think I saw an article like that a few weeks ago. Yeah, but I mean, I'm not looking to get paid to not use energy. Yeah.
Let me see here. That link. Let me see. Yeah, the link you sent me because that's a file on your PC. It won't let me.
All right.
Won't let me look at it.
Okay.
Don't worry about it. We'll get it next time. Says I'm looking at the 10-year keeping over 4. Low blood pressure. LBP, what's up, man?
Yeah, the
Looking
10-year right now. Let's have a look. Yeah, I'm surprised today that we are up 10 basis points, LBP, because the jobs number were uh, not, they're quite weak. Hourly earnings as well didn't go up as much as people thought. So I would have thought that the bond market would have done well, but it's weird because it's the short end. The short end didn't go up. Like the 2-year yield is up only like 2 basis points, but the 10-year is up 10. So maybe there's something there that I haven't seen, but I think that's worrying for the bond market because I think the Treasury and the Fed are desperate to keep it below 4.3.
Yeah. Another question here from Greg. It says, how will energy affect the housing to gold ratio? Housing to gold ratio. That sounds like some Mike Maloney type stuff there. I don't dive too deep into the housing to gold ratio.
I spoke about it today. I follow it in the UK.
Mhm.
Well, if energy prices here in the UK keep going up, the CPI will stay elevated. Bank of England won't be able to cut rates. They might even have to raise it further. That will make mortgage rates go higher, will make house prices go down. And I think that would, make the house price to gold ratio go down as well, i.e., gold will continue to outperform.
Mm. Yeah, so I'm assuming that'll happen, globally, so not just in the UK. So, question from Yvette says, will Biden announce on September 22 the crash of the dollar, or will they let the snowball just continue to roll? September 22. What's happening on September 22?
Don't know.
Yvette, what's happening on the 22nd of this month?
I
I'm
don't
not
know.
familiar with any events.
How do you know Biden is going to announce that? I don't know.
Right.
It
Yeah. So
must,
curious to find out what that's
must
about.
be on the weekend. Here's Rudy, guys. There he is.
Gotta put Rudy on the mic. Does she get her to speak or bark, or you gotta give her some
He
basic
does
commands?
bark, but yeah.
Let me see. Here's another one. Says, would another round of lockdowns be inflationary or deflationary?
Well, I think initially they'd be deflationary, but
Not shocked.
if they did the same thing they did in the last lockdown, which was eventually to pay everyone to stay at home and
The
print
after effect would be
borrow,
inflationary.
it would be inflationary later on.
Yeah, and inside there's talks of certain like California, the extremely liberal cities and states talking about preparing for this fall already, and yeah, it's so I wouldn't be surprised if there's pockets throughout the country decide to do some craziness like that. Dion says, "Do you think there will be more bank closures?" Oh, 100%, 100%. There's going
Yeah,
to be bank issues until there's
in the U.S.,
restructuring.
yeah, because there's about 4,500 banks in the U.S. So yeah, I'm sure there will be.
Yeah.
Oh yeah, talking about that, Mike, is the fact that Wall Street banks they're looking to issue like billions in bonds, which means they think that interest rates are still relatively low. And
Mhm.
why are they issuing bonds? Because they need the cash because they're losing deposits. So
Mhm.
that shows that the banking sector is in trouble. I think I
Yeah.
saw an article about that.
And speaking of which, just that emergency
Yeah.
fund that they put together is continued to trend upward. The BTFP hit another new all-time high this week, almost every week, and new all-time high for the banksters bailing out facility. So this right here shows that there's issues back there because they're continuing taking out these so-called loans
Mm,
that's supposed to expire next year, but we'll see. So
yeah.
there's definitely issues in the banking sector still.
I like the way they use these acronyms.
What's
It's
that?
basically BTFP. It's basically a bank bailout fund.
Yeah, so that's just another last minute emergency facility created to prop things up. So I'm assuming they got a couple more under their belt. There's something else. Says question. Lots of rumors of market crashing early
Oh,
October. Student
low,
loan
low,
payback.
blood, low blood pressure is asking about Newton, Isaac Newton. I think he set the gold to silver ratio around 15,
Hmm.
15 to 1.
What else? Okay, lots of rumors about market crashing on early October. Student loans payback and the emergency alert system being part of the issue. I've heard about all those stories, but then once again,
I mean, every year there's people talk about a crash in October because it's the time of the year.
right?
And they are like I think during the last lockdowns they they suspended uh, student loan payments, but now
Mhm.
it's back on.
Right, it's back on
October.
officially soon.
Yeah.
So they're projecting that that's going to be a reason why the housing market sell off on top of everything else. And so, yeah, I guess we have to wait and see because in this current moment, anything is possible, man. Do you think that the price of gold will drop in its initial stages during the next financial collapse like it did in 2008? Yes. I think it's going to be a sell-off. I mean, a lot of people are going to dump all types of paper crap, which ultimately drive down the physical price as well because that's how they measure it. That's how they create the spot price. And as a result of that, there'll be a dip. But then again, the premiums.
Well, actually, I'm not too sure about that one because
Really?
this year in March, uh, was it March when we had the bank troubles?
Hmm.
Gold went up from 1800, and then by the end of April, it was almost at 2100 in the middle of that banking crisis. So who
Mm,
knows?
yeah.
Well, things never, people. I know that gold dropped in 2008 from 1,000 in March to just below 700 during the height of the Lehman crisis in September '08. So it
Yeah.
dropped from 1,000 to like 680. But you couldn't get gold at 680. You had to pay like a 10% premium.
Mhm.
And then it turned around really quickly. And by 2011, it had like tripled. So I think you just have to hold on and
Right.
not try to be cute, like sell it here and buy it back, or
Right.
some, or maybe just buy some more if it does dip and
Mhm.
hold on.
Right. Because at the end of the day, you know where it's going to go, where it has to go. Here's a something that's funny. It says next facility the Fed should create should be called SHTF.
Yeah.
That would be funny, boy. Here's something here. Credit card companies going to raise swipe rate despite US merchants paid an estimated 93 billion in Visa and MasterCard credit cards free last year, just passed on to consumers. What can we do?
So the swipe rate, is that how much uh, the credit card company gets from the vendors?
I assume so, yes.
Yeah. Yeah, I know. I mean, when I ran the pawnbroking shop back in 2012 to 2014, I had a card machine and I had to pay every month to Barclays, something just to rent the card machine. And then
Hmm.
every time someone used the card, they took a cut,
Yeah.
you know. But, and I think that's wrong, to make, and that's why I'm against businesses that don't take cash. There are some businesses in the UK
Yeah.
who don't
Yeah.
take cash, and I try to like, if I can, if I get there and they say we don't take cash, I just turn around and leave.
Yeah. Yeah. And they're popping up here. Taco Bell's here and a couple other places are talking about doing that. So the question was, what can we do? And so instead of being a victim of the money manipulation game that they're using to charge you excess on top of whatever it is you purchase, dial back on using your credit card in that capacity. You know what I'm saying? Don't use it for the sake of just consuming rather than what?
Boycott the shops that don't take cash.
Yeah. Low blood pressure says, how do I get a Fed account at the Fed window? Your credit card's all maxed out.
Oh, low blood pressure. You need to become a bank holding company. You could ask Goldman Sachs because they allowed them to become a bank holding company over the weekend back in '08 when they were collapsing. So
Mhm.
yeah, give Goldman Sachs a call and say, can you help me to become a bank holding company? And then you
They're
can go
going
to
to
that discount window.
persistence over resistance. How you doing? It says, what would happen if the BRICS nations sell off their treasuries? Would the Fed have to buy them back to save the markets? Yeah, they're the
Yeah,
lender, purchaser,
uh,
lifesaver of last resort.
yeah. I don't even think though that they're going to sell them. They're just not going
Hmm.
to be buying as many, and
Hmm.
they're not going to because they're not going to be needing as many dollars, and
Yeah.
they're not be using as many. They're going to be getting paid less and less in dollars. So it's just, I don't think they're there to disrupt the treasury market. They're just
Hmm.
doing because they know if they try to gang up and go against the dollar like that, they could be in trouble physically.
Yeah. Not they all do it together. Can't because the U.S. can't attack the world directly. But we'll see. All right, so this let me see, 50 minutes. Let's look at. I see what's the name put buy silver and platinum. So I was looking at the prices. Action real quick. Let me gotta move you up a little bit here. But here's current silver activity. We got the
Well,
gold figures here.
gold and silver did well right after the job data, but then they slammed it down as usual. So gold is now down about $2, and silver is down about 24 cents, the spot price.
Yeah, 1964. It came down quick. And then what else we got here? Let me look at where'd I go. We got platinum here. So yeah, everything did a little. Uh, platinum came down as well from a thousand.
Platinum is looking better. It's it's down, but it's approaching 1,000 again. And recently, we got below 900.
Yeah. An all-time high, 2,100
Yeah.
back in '07. Then we got palladium.
Yeah, I
Also,
don't follow Palladium too much.
yeah, other than just them being listed here. So, all right, well, we got we're about 45 minutes. I think we did a good job of covering a good amount of subjects for this week for the first Mike and Mario, I guess I call it season 3, season 3, episode 1. But as always, everybody, it's great to connect with you guys. Hope you guys have a great Labor Day weekend for those here in the U.S. and for my people in the U.K. Continue to do what you do best. Stack, get your weight up, and enjoy life while you still have it. So, any last parting words of wisdom, Mario?
Well, not really. Just just try to, like you said, just maybe tune off from things and enjoy your life and do what you can for yourself, your family, and not don't let things get you down.
Yeah, yeah, I would second that. Second that. All right, good people. As always, be blessed, and I will see you guys later.